Welcome back to the Market Noise podcast. Thanks for joining us. We're on the Financial Autonomy channel, of course, and Market Noise is our weekly discussion on things that have happened in investment markets and stock markets. As I've been doing in recent weeks, you guys listening regularly would be aware, I'm having a bit of a rotation of co-host, and wherever I can, getting people from the financial autonomy community to jump in and help me out. And this week, I'm very fortunate to have Dash join me. G'day, Dash. Thanks for jumping on the call.
Hey, Paul. How you doing? Thank you for having me.
Very good. You've picked some interesting topics, so I'm looking forward to getting into those with you. Just before we kick off, as always, need to mention that what Dash and I are discussing tonight, it's general information, certainly not intended as advice. We don't know anything about your circumstances, so just factor that in. Of course, if you want to learn about advice services, then if you go to the Financial Autonomy website, you can find some details there on that. All right. Well, look, let's dive in. Dash, how about you kick us off, because you've got a good first one there to fire away.
So this is something that people have been experiencing for the last year and a bit, which is working from home. But slowly we're approaching that territory of going back to work or working from home and working from the office. And a lot of employers are trying to employ a hybrid system of both office and home, given some of the COVID restrictions that we currently have. And it's going to be really interesting to see how that's going to pan out for everyone that used to go to an office and do their regular 9 to 5 or more hours in some cases. So, I mean, a lot of us, or pretty much nearly all of us, have relied on working from home, using either Zoom or Teams to have those important conversations or meetings with our peers, and also clientele. And it's worked. And what we've sort of established during that period is the emergence of new technologies and companies forming where they are providing us with software to have those or facilitate those meetings for us online, but also having that ability to work in a sort of a safer environment. So as we approach a more controlled COVID environment, we're going to start seeing a lot of people going back to work. And what does that look like? And what about those people who, moved away from home and sort of moved into rural areas, and how they're going to find traveling back into the office, and how is it going to sort of affect us financially? Are we going to be spending more money, or are we going to be spending less money? So I don't know. What are your thoughts, Paul?
Yeah, I mean, it was interesting, this article that you grabbed there, the 99% of human resources leaders expect employees to work in some kind of hybrid arrangement moving forward, which is pretty impressive. I wonder who the 1% outlier was. But anyway, yeah, it certainly does seem like it's the future. And I mean, we were just talking before we went live that certainly I know, one person I know who sort of said, well, if they make me go back to the office, I'm quitting. And then in the reverse, I've had other people, I'm so glad to be back in the office. It's so much better. Don't want to be at home. So there's a whole range of sort of preferences. And I guess it's going to be pretty challenging for businesses to deal with that. If the business tries to sort of mandate, well, we want X, it's going to fit some people, but not everybody. I mean, how's it looking at your workplace, and how do you think it'll play out where you are, Jas?
It's an interesting scenario. So I think we're looking towards trying to make a hybrid arrangement work, where you come into the office 1 or 2 days a week and you work from home potentially 3 days a week or 4 days a week, subject to whatever you decide, or whatever we decide with our managers and such forth. But a lot of people that I've been talking to don't actually want to go back to the office. They're comfortable working from home. Productivity is certainly increased. I know costs have certainly reduced in the office.
Just on that productivity increase,
Yeah.
do you think that's been maintained? I'd be sort of interested. Initially, when people moved home, perhaps productivity was as good or better, but I wonder, would it have tapered off over time? Or I don't know, maybe the exact opposite is true and maybe people got better working from home as time went on. I mean, what's your sense of how you handled it?
Um, when I looked at it, first of all, I could see that productivity was it was difficult because people were trying to get themselves adjusted to working from home. So the first couple of
Yeah.
months were shall we say strange for most people. But sort of from month 3 onwards, and as time progressed, people's productivity or work productivity started to increase, and it increased dramatically. I've seen numbers between 30 to 40% in terms of increased productivity.
Wow.
But it also gave people the freedom and the flexibility to do what they would like to do, and sort of get things done around the house that they wouldn't have found time to do during the week because of sort of traveling back and
Yeah.
forth to the office.
Hey, we're just thinking about, we're keen here to talk about stock news and investment market news. What companies do you think might benefit from this move to hybrid? What's your best tip?
Ooh, you've got a lot of offices that sort of rent office space or lease office space from uh, traditional superannuation funds or whoever it may be. And these are guys that are literally going to save a lot of money. I think the costs kind of worked out. So when you aggregate all the costs that are involved in maintaining an office, I think for an individual, for accounting purposes, I think it works out to about $750 per day per
Jeez.
person. So when you start looking at costs like that, and you've got, for example, 5,000 or 10,000 employees coming into the office per day, that's a massive cost saving for any sort of major corporate. Um,
Yeah. So
and I
then we
think,
should be thinking about businesses that have got big headcounts
yeah,
that could cull that, and get some really significant savings. I mean, the banks sort of jump to mind, although I don't know from a security point of view how well they would go with hybrid. They've probably figured it out though. But you'd imagine a lot of the head office banks would have thousands and thousands of employee in CBD offices. I mean, a lot of
yeah,
financial services generally, I guess.
yeah, they do. I mean, they're the ones that are going to have um, thousands and thousands of employees where they could be saving significant amounts of money for example, on cleaning, electricity,
Mm, mm.
uh, desk space, health and safety, all that kind of stuff, which could be reinvested into the business. However, I think where people or businesses are going to lose money is your smaller businesses like restaurants, cafes.
Yeah.
Um, the person you pick up your newspaper from every day on the way to work.
I wonder too if you'd imagine, therefore, there's going to be some surplus office space. Maybe some of that gets transformed into residential to get
That
some sort of use out of it, and whether that ends up being a bit of a transformation for the city.
um,
And
I think you're absolutely right, because I remember when I was working in London and there's banks that were moving from one premise to another. It always ended up being a case where the previous premise or the previous building just turned into residential flats.
mm,
Um, and there is talk about office space. For example, I know friends and family who work in the City of London where they're thinking about using office space for agricultural purposes, funnily enough. So
yeah,
indoor planting and sort of growing plants and um, providing that produce to local supermarkets and various other places. And by doing that, they're able to um, earn their, and correct me if I'm wrong here, but their carbon credits,
right.
because as we move along to zero emissions, um, a lot of companies are having to find different ways on how they can earn their carbon credits and reduce down to zero emissions. And sort of meet sort of government targets that have been laid down for them, which is
So
going to
that's
be
a real outlier of work from home translates into office buildings being used to grow lettuces. I mean, wow.
yeah.
All right, well, look, that's a great first topic to kick us off, Dash. I'm going to take the next one and take quite a different turn here. This is from someone that I follow online, Josh Brown, and he does a few different things, but one of the things he does is he has a blog called The Reformed Broker. That I can't say I read every post, but I have a look every so often. And there was a piece he put out last week, valuations don't matter. Now, I'm just going to read a bit of this, and then I want to get your take on it, Dash. Here we go. There's absolutely no reason why a person should expect that the valuation paid for a security will either help them or harm them in timeframes of 1 to 5 years. This is also true and always has been. There is no evidence that starting valuation is either a proven helper or hindrance to an investor in and of itself. Why? Because there are too many other factors that traders and investors give more weight to in the real non-academic stock market that exists in the physical world and away from the spreadsheet. You don't have to like it, but you have no choice other than to accept it or find a different game. The takeaway here is not to ignore valuation or pretend that any price you pay for a security is as good as any other. I don't believe that, and I don't ever say things that sound anything like that. But I don't have a problem saying the following. Guessing in advance which characteristics of stocks people will select for is every bit as hard as reading people's mind about anything else. The crowd will do what the crowd wants to do and buy what the crowd wants to buy. And for whatever mercurial reason, the crowd coalesces around. And despite what all your textbooks and screens and disciplines tell you, it will be unpredictable. It will change from one season to the next without warning or logic or reason. And just when you think you've got the key to the market, they change the locks. Get used to it. So most of us are investors listening to this podcast. Josh says valuations don't matter, which I get, but is also really interesting. What was your take on this one, Dash?
I think he's got a point there. The stock market is a very sentiment-driven sort of engine or vehicle, where the tiniest bit of news, for example, could greatly affect the value of a stock price. Now, I don't know if everyone remembers this, but I think it was Ronaldo I think he was doing a press conference, and he took some Coke bottles and just moved them to the side and brought in
for water.
Now, Coca-Cola, as we know, they've got a lot of infrastructure, they've got a lot of land, they've got a lot of value behind the company, the brand name. But as soon as he did that, there was rumors that within that split second, he wiped 4 billion off the price of Coca-Cola. Now, that was driven by sentiment and people's perceptions, but it wasn't driven, nobody sort of sat there to say, well, actually, he just moved a couple of bottles, but the value of Coca-Cola is brilliant. You know, it's here to stay and everyone drinks it. So I think Josh has got a really valid point that, you know, it's not always driven by valuations. It's also people's perceptions and what the market views a certain stock to be valued at. But then you've also got to look at, I suppose, you know, what does a company actually hold? What assets does a company actually back? And is it the true value or is it just an inflated value? Because as time has, or history has told us previously, bubbles do tend to burst, especially like the tech bubbles, for example. Everyone was riding the tech bubble, and then all of a sudden it burst and a lot of people lost a lot of money. But then you've also got things like cryptocurrency, where what is it actually backed by?
How could you value that anyway? I was thinking exactly that. Yeah,
exactly right.
So,
how can you value it?
And I think part of what, sorry, I was just going to say, I think part of what Josh is trying to hit on here, which is interesting of recent years, is that the traditional Warren Buffett style investor who would do a whole lot of analysis, come up with, all right, based on the cash flow and the forecast growth and blah, 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 this company's worth $10 a share. And therefore, if they can see it trading at 8, they go, beauty, I'll buy it. But if it's trading at 12 or 15, they say, well, that's too expensive. It's only worth 10. If you follow that approach, which is the traditional value invest approach, and plenty of people still do follow that approach,
Yep.
you would have missed out on almost all the best performing shares. And partly what he was saying, because I heard him discuss this a bit more broadly, I didn't quite get in the piece that I read out, was that good companies, say Apple was an example that he used, they're never cheap. Never. They're never trading below valuation because people want them. They're good quality businesses and people just want them. They always want them. And if you try and hold out and say, oh, the valuation's not quite right, then you're forever on the sideline, or you're buying some sort of inferior company. So I can totally see how you get to that, but it still feels the idea that, and he's not totally saying it, you can completely ignore valuation. He does make that clear.
Yeah.
But it's still a difficult thing to get your head around. Like, say, Tesla as an example, where the valuation, or Rivian even more so, where they haven't got any sales. We spoke about them last week. It's just hard as someone who is interested in markets and with any sort of basic numeracy, you can look at that and say, yeah, that makes sense to buy that. You know, it's a challenge to kind of fight against your logical self.
Look, I totally agree. I mean, it's a difficult one. I mean, when you look at, for example, things like supermarkets or utilities and banks, you're trying to find the actual value. Everyone's trying to find a good deal.
Yeah.
And everyone will go down to the nth degree to find that good deal. But is it actually going to perform on the day? Well, that's a 50-50 question. It depends on how the market performs overall, and are you going to, did you get a good deal or not? But then the stock market is always going to be volatile, and we've just got to give it time. And like you said, Paul, at the beginning, I think when you buy investments, sometimes you do miss out on those best days, and if you miss out on those best days, that's the make or break for you.
In terms of good data around that, isn't there?
Yeah. And if you're, I suppose I've heard some advisors say, and I've never used it myself, but sometimes you've just got to be in it to win it.
Yeah.
I know it's a very blatant statement, but it is true.
Yeah, I mean, there's a lot of what drives investment markets is momentum, and yeah, exactly. I mean, crypto being the most obvious, as we touched on. I mean, there's no way you could spreadsheet yourself a valuation on crypto, but there's plenty of people that have made themselves very wealthy as a result, or even just made themselves a small amount of money. So, sitting on the sidelines and trying to be academic about it is a challenge. Hey, look, let's move on. I know you've got one here, Sydney and Melbourne. Do you want to hit us off? What have you got there?
Yeah, so this was something that I looked at. So Australians, they take their lifestyles seriously. So could coronavirus-induced flexibility change their living preferences forever? I picked this topic up because I've noticed, and it's been a hot topic of discussion, moving away from CBD and sort of living the country life or living in rural areas. So, I mean, we as Australians, I mean, we live in an enviable country: white sand, beaches, rugged mountain ranges, and a sparse and stunning outback. Yet, though many Australians have long dreamt of living by the seaside or in a quaint rural town, but large employment hubs in urban areas like Sydney and Melbourne have tied a significant portion of the population to the inland suburbs of the largest cities until the pandemic. So in addition to all the troubles and sadness, coronavirus has changed the way many of us work, largely due to the mainstream adoption of working from home that looks like it's set to continue once the pandemic life is finally over. This means that for some, notably wealthier white-collar workers who have the option to work remotely. They can leave the busy and expensive large cities and move somewhere much quieter and cheaper in pursuit of a better lifestyle. Now, reading some of the data shows that Australians are already on the move. Sales volumes in regional Australia have surged by 20% in 2020. A new report by the property selling website realestate.com AU has shown this was the double growth seen in state capital. Sorry, this was double the growth seen in the state capitals, and the study said that COVID-19 was driving a lifestyle shift.
I saw another bit here. Sorry, I saw another bit here that actually it reckons it's 3 times the pace of capital city growth too. So, yeah, it's certainly interesting. Have you and your family considered a regional move, Dash?
Yeah, I mean, we have the discussion has been on the table, and I think I mentioned to you earlier before. A lot of my wife's siblings, we live 2 streets away from each other, and I have seriously brought up the conversation of potentially moving to Queensland. I mean, let's face it, the weather's much nicer over there, and the cost of living is a bit cheaper. And if I've got the opportunity to work from home, there is a strong potential where I could sell up and buy something potentially outright in Queensland, and less stress sort of overall for myself, my wife and the kids, and gives me opportunity to enjoy that lifestyle with my family a bit more.
Yeah. It is interesting, and certainly I'm hearing plenty of reports from clients that prices of regional property has definitely risen quite considerably, and I guess that's an extension of the first topic that you had around the hybrid work and this sort of thing. I would imagine even it's a consideration if you're working from home, you need a bit of space, so the
Absolutely.
smaller inner city accommodation, maybe that doesn't work if kids are trying to do, well, hopefully homeschooling doesn't continue, but certainly if you're trying to work from home, you need an extra room or a study, these type of things that perhaps wasn't so essential before when you were going into the office. And yeah, that extra space close to Sydney, Melbourne, probably not affordable, is it?
No. And I've seen, looking at regional Victoria, for example, as well, I've seen properties just being snapped up really quickly, and their house prices being dramatically more than what I would have seen pre-pandemic. So, for example, I've seen houses that have been on a block of land, say 1,000 square meters, valued at around 700 or 800,000, now probably going close to $1 million or more. If I compare from my own personal experience in the UK, for example, I've got a house or a flat in the city, and I've got a holiday house by the beach. Now, when I originally bought the holiday house by the beach, it was going to be a great income earner, but the property price was never going to grow, and I knew that. But what happened was, come COVID, a lot of people just moved away from the city. And what we found was that our holiday house tripled in value, and our flat in the city fell by 100 to 150,000 pounds in value. So that, I mean, you're talking nearly.
Hey, there's a nice bit of diversification there, Dash. Well done on the investment thesis there.
So, I mean, look, I think it's a generational saying: "Don't put all your eggs in one basket." But it's definitely having a very interesting impact and value on property, sort of all over the world. I know my mother, for example, she's got a house in Madras, and which is basically, it's very close to the city, and all the tenants are just vacated and they've moved back to their villages or local towns because they don't have to rent, they can work from home, it saves them the additional money. So we're basically sitting on a property in Madras which is not drawing any rental income. But it also kind of begs the question, what is going to happen to all these property values when, if we do go into 100% work from home, what's going to happen to to these property values, and how's it going to affect the market?
The only thing with all that, and it is really interesting, and I hope it works for people who are up for that. But as someone who lives reasonably close to the city, I'm not in the city, but I don't know, 7 or 8 k's out, and I'm in the city a lot. I love being in the city in the CBD. I love the energy and the restaurants and the bars and the art gallery and when they have different festivals and bits and pieces on. I mean, many of the listeners will know I'm a Formula One fan. So in Melbourne, the Grand Prix weekend is just fantastic. You've got the Australian Open tennis. It'll be a bit different this year without as many international guests, but normally the vibe in the city's fantastic. And it'll be interesting to see. But I mean, what I hope is that the apartments in the city become more affordable. That brings perhaps younger people in, and that creates its own vibrancy within the city and energy and life. And that's what reinvigorates the city, and gets it going. As I say, different things suit different people. And for the people that the regional work's awesome. But I think there's a lot of people who are going to love the energy of the city and the opportunities that provides. Anyway, time will tell, hey?
Yeah, look, I agree with you. And I think what's probably going to happen is we're going to have a case of sort of managing different expectations for different people and different demographics. You've got your, couples without children, single people, the younger demographic that, like you said, will enjoy the vibrancy that the CBD has to offer. However, you've then got your couples with children and people who've been going into the city for the last 10, 15, 20, 30 years, you name it, who are now looking to probably take their foot off the accelerator a bit, not having to worry about that morning commute, relaxing with dropping off the kids at school and stuff like that, and probably want to move a little bit outer. But I also think about what about talent that we're probably missing out from in regional places in Australia, where there is some hidden employable talent that major corporates are missing out on, which could increase the values of these companies and bring out new fresh ideas. But there's a lot of question marks. Yeah.
I think that talent one's a good one. Hey, look, let's move on to a new topic. I got another one here. It was in the Financial Review about coal buyout that I thought was really interesting. So this is funded by the Asian Development Bank, and they are working on being able to buy out Asian coal-fired power stations with the idea that they can then pay down the debt and shut them earlier as a way to assist, deal with global warming. Trying to find the most inefficient coal-fired power stations around, buy them from their owners, pay down the debt, and then shut them down. And part of the expectation there is that they can get some carbon credits for doing that as well. This particular piece was focused on, well, gee, that's not very good for Australian coal miners, which I guess is fair enough. But, there's a question there about whether that's really our greatest concern. But I just thought that was a really interesting piece and a really pretty direct form of action to go in by the coal-fired power plants. It's funded by the Japanese government, Danish government, multinational lender HSBC, philanthropic foundation of Amazon founder Jeff Bezos, the Rockefeller family, and the IKEA Foundation. So there's lots of people throwing money at this and taking some pretty direct action. What did you make of this one, Dash?
It's an interesting article, and there's a few questions that come into mind. Is you've got all these, you've got a couple of banks, you've got a couple of, I think when I did a bit of digging, there was Prudential, who's a major insurer in the UK, and there's a lot of sort of wealthy corporate establishments that are looking to put some money into this and buy these existing coal power plants and sort of shut them down in the future. But
it's great PR for them, isn't it?
Oh,
they can get in and say, here's something positive we're doing.
it ticks the ESG box.
Yeah.
Probably gets some of those carbon credit ticks that they need for zero emissions. It ticks a lot of boxes for them. But at the end of the day, there's one or two things here. Is there a plan that we don't know about in terms of how it's going to make them money, or is it a tax loophole? And are they going to save some? Are they looking at tax efficiency here, and how is it going to create them value, sort of going forward?
I'm more interested in, okay, so they shut the coal-fired power plant down. Are
Yep,
they building another power plant? Because that's all very well. They've reduced the emissions, which of course is important and we want to happen. But the local residents still need their electricity. So,
absolutely
I mean,
right.
I can't imagine that hasn't been thought of, but I'm just in this article, it makes no mention of the fact as to how they're going to replace that energy production. But anyway, I'm sure that wouldn't have been ignored. But yeah, no, it was an interesting one. Hey, another just completely different tack, but one that caught my eye, and in fact, it sort of leads on to another topic that I wanted to get into as well. Um, there was an Australian, Jeff Huntley, and he created a project attempting to highlight the ridiculousness of NFTs, which listeners will have come across, non-fungible tokens. And he went about that. So he called it NFT Bay, and he's just copy and pasted basically all these different NFTs, right click, save image, right? And he's just saved them and he's put them on there just to sort of highlight it's absolutely absurd the amount of money people are paying for these things that are just totally copyable. And it's not even like there's any loss of quality or anything like that. You can copy them with absolute ease. Uh, and yet people are losing their mind and spending millions of dollars on NFTs. Now I want to get on to Bored Ape Yacht Club, which is a really interesting one. But before I do, thoughts on NFTs, Dash? How many NFTs do you own, and what's your forecast for the future of the NFT universe?
Well, look, I'll be honest. The thought never crossed my mind till he brought it up. So I'm going to be honest here, and I had to do a bit of reading into the subject, and it was interesting. It was very interesting because effectively, you just find pictures that could skyrocket in value as quick as a cryptocurrency. And I think there was an artist in America who goes by the name of, I think it's Beeple or Beeple,
Yep.
who has, if we could say he's a pioneer in this area, where he has been selling these pictures, which people have used NFTs to buy his pictures, and he's selling pictures for like $66,000 or over $1 million, or I think his highest paid picture is 1.3 million US dollars.
Yep.
Which it just sounds ridiculous. I mean, where is this money coming from? Recently, there was an auction of his pictures, I think through Christie's, and I think within minutes they raised 460,000 US dollars for a collage of all his pictures on one portrait. And there was one investor who bought one collage for $1, and then 2 weeks later was offered $50,000 for the same picture. And that's a massive increase in value, which kind of then begs the question, so what asset is actually backing this value?
Yeah.
So,
Yeah.
I
I
mean,
mean, it
look,
highlights a couple of things. I mean, one thing is just the extraordinary amount of money that some people have made in cryptocurrencies, because all this is
yeah,
traded. Generally, the NFTs are traded with Ethereum, right?
yeah,
And people have got this Ethereum, and I mean, there are people, I've certainly come across them, that have made millions, right? And they've got more Ethereum than they know what to do with. And if sure, they could sell it and convert it into dollars, but then they've got to pay a ton of tax, which they don't really want to do. So what else are we going to do? Let's buy a cartoon image of a gorilla or something, because hey, that's a bit of a laugh and it looks cool, and I can put it on my Discord profile, on my Twitter profile, or something. And there's a cachet about it. I guess it's like a fashion item almost. But the dollars, the amounts involved. It really is extraordinary. And yeah, so look, I thought this project was interesting, but I just wanted, it took another turn for me. Over the weekend, I listened to a podcast that I'd recommend people check out. It was on the Invest Like the Best podcast with Patrick O'Shaughnessy. And this particular episode, I don't think is actually part of the normal program. It was some new program or something. But anyway, he had it on that channel. And it was about the Bored Ape Yacht Club, which I had seen stuff come up about it. But this was just a piece that someone just totally explained how that all worked. And the interesting thing about that, which is where NFTs I can see making sense. So you bought the NFT sort of headline piece was a picture of an ape, right? And they're all unique, and there's 10,000 unique ones. And, they look kind of cool, but not $250,000 cool, or some of them millions of dollars cool, right? They're just, oh, cool, they're an ape. But the difference is it's actually a membership to a club. And every time these apes are sold on OpenSea, usually, the organisers, the company behind it, gets 2.5% commission every time they sell. It's built into the blockchain, right? So there's a natural way that this organisation has cash flow. And as a consequence, they're putting on, so they put on a conference in New York, and they actually hired a big yacht, which is obviously totally appropriate for something called the Bored Ape Yacht Club, hired a big yacht. And the only way you could get on is if you owned one of these NFTs. That was your ticket, and that proved that you were a member of this club, and that gave you exclusive access to these functions, these, events.
Yeah.
And of course, it's going to be predominantly, I mean, I saw photos. I don't think I saw a female in the crowd. It's all young white guys pretty much, right? It's your Silicon Valley dudes who have got into crypto early, too much crypto to know what to do with. Hey, let's buy an ape. But, they're able to socialize with people that I guess they relate to, that, it's part of their tribe. It's a status symbol. There's talk even in this piece of potentially the club buying a nightclub or a bar in Miami and having that as a permanent clubhouse, like you have the Yale clubhouse and these type of things, that there would be a clubhouse, and you need to be a member or somehow or other vouched for by a member to get in. Now that's where an NFT gets interesting, right? Because it's all very well to say, yeah, you can right click and copy the image, but you don't have the code that proves that you are the authenticated owner. And if it's the image is just, that people have T-shirts printed of the image or whatever, you could have it on a key ring or something. Yep, here's me, and you can use it on your Twitter profile. But if it's also an ability to access a particular community, I mean, we all love communities, right? And it's an interesting kind of filter too, because not everyone's going to be able to get into that community. And so listening to that piece, and like I say, I encourage people to give it a listen. It was absolutely fascinating. That to me is where I can see NFTs being really interesting. It's not just some digital image, it's what can then flow from ownership of that digital image. Thoughts?
You're absolutely right. I think, look, I think as a society, we're trying to evolve, and the use of NFTs here is probably paving the way to, okay, how do you become a member of a community or a club or whatever it is, as opposed to the old, hey, can you get me into this club? Or it's introducing a new concept to everyone that's out there, and it's new technology. I mean, not a lot of us, and like I said in the beginning, I didn't know what an NFT was till you brought the topic up, so I had to do a bit of quick reading around it. And you explaining that, being an elite member of a club, and you have to have this NFT token in order to be that elite member, it kind of gets you thinking to sort of question yourself, okay, so which clubs would I like to join, and how many NFTs would I need to buy in order to be a member of that club, and what is it going to cost me? And I suppose it's like the age-old saying, putting your money where your mouth is. If you want to be part of something, and I suppose the other way you could look at it, it's an easier way to part with your money.
That's true. That's true. Hey, final topic, Dash. But speaking of getting your head around it, this is one I struggle with, so I'm gonna turn to you. Explain stable coins to me.
Stable coins. Look, this is an interesting one where they're trying to back the value of the coin with an asset. It looks like, you've got banks that are trying to encourage regulators to allow them to regulate the use of what effectively is a version of cryptocurrency, but it kind of detracts itself from the original theory of cryptocurrency here. And look, I'll be honest, when I'm looking at the value of stable coins and what they bring in terms of market value, it's not great. I mean, we've got, I think there was a USD coin, for example, which is just valued at $1 US. It is what it is. But is this a avenue for banks to get in on the cryptocurrency scene and possibly introduce a new version of currency? Because look, if we look at history, banks used to physically print their own money. If you go to a bank, so I remember back in Scotland, Royal Bank of Scotland had its own version of a pound. Bank of Scotland had its own version of a pound. Clydesdale had its own version of a pound. Cross the border and come over to the UK, the Bank of England's got its own version of a pound. So you've got 4 different currencies, but they've all got the same value. So are banks trying to use this as their gateway into cryptocurrency? Because they are getting scared because it's a massive market.
I've got to say, I really hope so, because, and I don't, far from an expert on stable coins, I struggle to get my head around the actual use case for stable coins, but I know that there's plenty of demand and people use them. And yeah, it's about being in the crypto space, but not having the normal volatility associated with your Bitcoin and Ethereum and all the others. As you say, it's pegged to the dollar. But the issue that you've got here is that what it's supposed to mean is that for every one stable coin US dollar, let's say, whatever it's pegged to, let's go with US dollar, then the issuer of that should have $1 US sitting in a bank account somewhere to back it up, right? It's like the old gold reserve days where the currency had to be backed by physical gold. It's supposed to be the same concept, but there's no regulator in the world checking this. So these organizations are issuing these stable coins. Nobody knows if they've actually got the currency behind them to back these things up that they claim they do. There's no police anywhere keeping any sort of eye on this. And I've certainly seen articles that suggest that, look, if you just do the maths, given that a whole lot of the banks refuse to deal with these companies for concerns about, money laundering and some of these type of issues, it just doesn't make sense. Like, where is all this supposed money that's supposed to be backing up these stable coins? Because it's not showing up in any of the banks that anybody can see. And so this stable coin area is a potential market failure. If it gets revealed at some point that, hang on, such and such a provider has 100 million of stable coins out in the market, but actually only has 10 million US dollars sitting in the bank, you could get some really nasty movements, which would then cascade through to your Bitcoins and your Ethereums and the whole crypto space. And, there would be plenty of people laughing on the sidelines saying, well, it serves them right. But it would be destabilizing, and it'd be interesting to just see the knock-on effects, So if you could get it to a situation where something like banks that are regulated could issue stable coins and then have regulatory oversight that, look, if you say you've got this amount of money in reserves, well, prove it. That would be a great result, and it would really, I think, help the whole crypto environment and give people a whole lot more confidence in the system,
Yeah, look, you're right. I think, look, let's look at what's going on now at the moment. If you look at, you've got your regulators and you've got your banks. And I mean, if you look at APRA, for example, APRA makes sure that banks have enough money to cover their debts, capital adequacy ratios, for example. But like you said, there's nobody regulating these cryptocurrency firms or these stablecoin firms to actually say, okay, so you've got 100 million issued, now we've got 100 million in the kitty to make sure that you can stabilize this currency and nothing bad's going to happen. And I think, look, till we get to that point, that's when we're going to see we're going to see volatility. But the problem that we have is banks, banks across the world, they're still trying to come to terms with or understanding of governance, regulation, compliance management, risk management, and how do we manage this? Because traditionally, everything was written down on paper, and look, I write things down on paper, and I would have lost it 2 weeks later. And till banks get savvy with their data, till they have more people to understand this kind of stuff, then that's when we'll probably see some stability and banks taking on things like cryptocurrency and stable coins.
And some of it too, to your point about writing it on a piece of paper and then losing it, is a big reason why a lot of individuals are uncomfortable with crypto, because at least at the moment, if you've got your money in the bank and you forget your password, you hit forget password on the website, and eventually you'll be able to recover it. But of course, we've all heard of the stories of your cryptocurrency people who have lost their password and it's just gone forever. There's no central agency where you can hit forgot password and get it back. And so again, that's where some regulation and some defined players, some credible players, and I'm sure there are solutions already depending on how you do the custody arrangements for your cryptocurrency. But some of that sort of stuff, I mean, it would terrify me. Wouldn't make me comfortable having significant amounts of wealth in anything like that, where it could just go wrong. Or even if you passed away, how's your family going to find it? Or these sort of things.
It's an interesting question. How do you write it down in a will? And who's going to get the password, and how are you going to take the cash? There's a lot of unanswered questions.
All right, Dash. Well, look, we should bring this one into land because we've been going for about 3/4 an hour, and I think that's long enough for Market Noise listeners. You guys have got life to lead, and we don't want to tie you up too long. But look, thank you for listening to the podcast again, and for listening to the Financial Autonomy channel more broadly. Really appreciate it. Thank you to Colin, who jumped on the live stream and threw in a couple of comments, which was wonderful. As a reminder, obviously, most people listen via audio, but of course you listen via audio. Listen to this podcast via the audio mechanism, but we do also have it up on YouTube. So if you ever want to check that out, whether you watch it live 8 o'clock on a Monday night or you check it out later on, it's always on YouTube as well, if that suits you. Look, Dash, thank you for giving us some of your time and sharing your insights.
No, it's been a pleasure to be here. Thank you very much. Thanks for having me.
See you, Dash, and see you all next week.
See you next week.
Bye-bye.